Well, welcome. Hi, Mish. We are back with another video, and today, what I'm hoping we can talk about, considering the fact that in your daily today, you're going to publish about ARK, which is up about 20% from when you last wrote about it. And I have Super Micro up here because I thought this was a really good example of why we should talk about taking profits, because I'm pretty sure that nobody thought that in March, when this thing was trading $125, Nvidia's best friend here, and Nvidia's continued to go on and make new highs. The market's made new highs, and this thing is worth about 20% of what it was then, and its future is questionable. So good time to talk about when and how to take profits so nobody finds themselves holding the bag, like I'm sure a lot of people are with SMCI. So I'm going to bring up ARK, and let's start there. All right. So you wrote about ARK back down where it was trading around 48. How do you figure out when and where to take profits when something just really goes your way?
Okay, well, let's just step back a teeny bit on ARK, right? Because you mentioned Supermicro as basically 80% down from where it was in March. And certainly ARK peaked out in 2021, and it's been down 70–80% since that peak. Yeah, it was, when was that? It was 2021, right? And she was the darling of the market and raised billions and billions and billions and millions of dollars, and then became the worst money manager ever. So, I always have followed ARK because, well, a few reasons. One is because I was intrigued by how much she digs her heels into her message regardless. And her message is always hyperbolic, like Bitcoin's going to 1 million kind of thing. Tesla's going to 30,000. Well, maybe she's right about that, but especially since he's now the leader of the free world, along with Trump. But the point is that I really didn't pay attention to it until, well, that's not true. In 2022, I saw it looking like it was basing out into 2023. I even bought it in 2023. So let's start there, because that was a classic story of me getting out before it turned into a loss. So we can start our story there. And the reason why we're picking ARK is because we have a market right now that is making new highs. We have a lot of very beat up stocks that are starting to look more interesting. And so ARK was something that I focused on ahead of the election in anticipation that this could happen, and followed up with today, because what has really changed about ARK, we don't know, right? And this is exactly because of the lesson I learned in 2023. So when I saw ARK go into a bullish phase in April of 2023, I actually went on Schwab, I remember it so well, and said, Schwab looks like it bottomed out. Your risk really basically is about $5 or $6. If that last swing low right before it, if you really wanted to hold on, then your risk was probably a little bit bigger, down to the actual all-time low that was made in the beginning of the year. And I had bought it actually for the fund. And so look what happened. So this is exactly, we took out that swing high that we had right after you just put that low. You see how it went straight up and made a high? That was back in the beginning, right? It took that out. I thought I was a genius. I didn't add. But then all of a sudden, you can see what happened. It got up to around 50 and started to fail. So two things is, if you got in at around 38 to 40, which is where I'm going to just round it up, and now all of a sudden you see that it's taking out around that 45 level, and you're like, I'm a genius. But yet it only goes up another $5 and starts to sell off. How do you protect that? That's the point of our conversation. Back then, what I did was, since I was only risking to under that other swing low to under about 37, and I bought it around 40, when I made $6 at 46, I already took a profit. So one of the things that we want to start with is, regardless, as a discretionary trader, this is something we've taught for, I don't know, 20 years at Market Gauge, is when you get 2-to-1 to your initial risk, it's always good to either go to a no loss stop at the very least, or at least take a profit. Why did I take a profit as opposed to just going to a no loss stop? Because it was ARK and it already had this spectacular move down. I wasn't buying NVIDIA. I was buying something that had a lot to prove that it could perform. So now where did I take my second profit target? So basically, after I saw it went out at 45, I got really excited. So in this case, but I didn't take any profit at 50 when it started to sell off a little bit. I waited because I thought maybe, first trip at 50, it's going to go down, it's going to go back up. And that is exactly what it did. So Geoff, if you look at when that first little peak high was over 50, move your cursor up. Yeah. I was like, I'm taking a profit there. This thing could go to 60. I wasn't like thinking this thing was bottom and was going to go up forever, but I was like, this is a good trade. So it did exactly what I thought. It went back down. It went back up to 50. But look what happened that second time it went up to 50 right after that. See that? Yeah. It didn't go any higher. And look what happened the next day. It gapped down. That is when I took a second profit, just in case a third time would be a charm. And then I sold the rest of the position, guess where? Under the 50 when it broke down. I'm like, okay, this trade is no good. And I hadn't touched it since. So I just thought we should do that because at that time, if you recall, the market was doing well. This was after the bank debacle and the market was starting to come back. But this thing wasn't quite ready. So now we can fast forward to the present.
Yeah, so that's a lot going on there. So first of all, your first profit target was a function of your risk. So 2-to-1 versus your risk, right? Your second profit target was a function of watching the market action, right? So I'll leave it at that because we can go, with the watching the market action portion, there's, we can go over a lot of examples. We'll be here all night, but that's, so how are we gonna deal with something right now like this, that's completely taken off like a rocket ship?
Right, exactly. And that is my point, is that when you make a new high like that, sell off, and then you go back and you can't get through the highs, and then the next day you gap down like that, just in general, that would at the very least be a place to take a second profit, even if it's not much higher than your first, or at the very least at that point say, okay, this thing looks more ominous. Where's my stop going to be? But we're not going to cover trailing stops today because that can be a whole other podcast for another time.
Right. What's going on right now in the markets is you've got plenty of things that look like ARK here that are just taking off, and a lot of people could be thinking, well, why should I sell here?
Exactly. And again, I like to pick on ARK because I just find it so amusing that she became so famous with the worst money management. And yes, maybe a little bit spiteful in that we've had much better money management. I've made much better calls, and only our very, very small but enthusiastic audience knows who we are and who I am. So there's a little bit of jealousy there, but whatever. It's just so interesting to me always what makes one person become like uber famous for a call on Tesla when there were so many people who were bullish Tesla, including us. And then what makes people stick with somebody when they drop 70%, so and have no money management. So that's my little side story there. So let's go to, but that tells you why I keep focusing on this stock. So October 28th, at the end of October, I looked at this chart once again. And by the way, you can see that 50 has been a point. I mean, it's gone up and down a little bit around it in the beginning of 2024, but then it sold off again. And then it had that massive sell-off and made a new low in August. So I'm like, boy, am I glad I have completely forgotten about this particular fund. Look how horrible it is. And yet, you know, it was a classic reversal bottom, which is, again, something that we teach about at Market Gauge, glass ceiling bottoms, brick wall bottoms, et cetera. And we've covered a little bit about it, I think, in a former podcast, but at least got me interested in looking at it again. I had a real solid technical reason to keep an eye on it. And I watched, it went up to the 50, it couldn't clear the 200, it broke down back under the 50. I'm like, okay, never mind, this thing is a piece of dog do again. And then when I saw the sideways action between September, when I finally wrote the article in the end of October, a couple of things happened. One was that it broke out over the calendar range, the July calendar range. So that was intriguing to me. Two, if you look back at the leadership, it was starting to slightly outperform the SPY. And if you look at the momentum indicator, it was actually finally clearing into kind of a bullish divergence. So, you know, these are always the things that intrigue me. Our indicators, I've said this over and over again, are really basically all I need. That with the price point and the phase. And even though the phase hadn't necessarily gone to bullish, it had gone into accumulation, because now it was over that 200-day moving average. So let's not lose the point.
Yeah.
So the entrance on that was not right away, because look what happened. I mean, you actually sold off again, but this time you held the 50. You rallied one more time at the end. This when I wrote the article, it sold off again. So really, if we really want to talk about this trade and profit target, we have to really talk about the proper entry, which would have been the gap up 3 days ago. So let's go off the assumption that we got in somewhere around 50 on the day it gapped up based on the analysis that I had. So the first thing, of course, would be the old-fashioned, how much are we risking versus the ATR? And I don't know the ATR off the top of my head. It doesn't have it here on the stock charts. But nonetheless, you could just simply say, depending on the type of trader you are, you either would risk to under the gap if you're a much short-term trader, if you're kind of a mini swing trader, which is what I'm really known for. You might say, okay, fine, I'm going to risk to under that 50-day moving average again. In other words, if it breaks 46, $4, I'm gone. So now let's talk about that. So if I'm going to risk $4, I look to make $8. Today was the first day that you had $8. So I would definitely say today would have been a day just on the basis of the 2-to-1 to take off the first tranche of the position. So now I write a second article because, like as Geoff mentioned, we had a 20% move from when I wrote the first article. But you kind of have to say, unless you were really, really anticipating the day before that gap and got in that day, most people probably would have not gotten in until it had that gap up, something we haven't seen in this stock in a long time. So let's go back to profit taking. I'm now anywhere from 1/4 to 1/3 to 1/2 the position out, because it's ARK. I wouldn't necessarily always say I would take that much off on a position that I really feel long-term about. You can see the momentum. You can see the leadership. This thing has gone parabolic on its second gap up. So how now would I take my next profit? I would like, before we move to the weekly charts, tell you that most likely what I would do is say, if it can't hold this gap up it had today, if it breaks down under today's low, look at the work that it did at the end of 2023, right around those levels. I'd probably say, I would just say, thank you very much, get out somewhere, let's say around 54, which if you read the first article is where I thought it really needed to break out of. It needed to clear that high, and it has. But based on the 2-to-1, I took a profit, okay? Because if this thing completely turns around tomorrow, which it totally could because it's ARK, at least now I took a profit target, and I most likely will not lose money because I would definitely not let it turn into a loser. I would have a no loss stop. So now where's my second profit? This is the lesson part. We have to go to the weekly chart, because if we scrunch this up too much, it won't be that great. So go to weekly. So this is where the art comes in and the science as a trader, right? So you can see, I mean, I'm telling you exactly my thought process. Okay, ARK finally made a move, long at around 50, got my 2-to-1, took some profit today against that 58 level, which is exactly my 2-to-1. And now I'm sitting with a partial position. I know if it breaks down under 54, I'd probably just say, thank you very much and get out. Even if I thought maybe it had something more and I would just had to be more patient, I would certainly not let it turn into a loss. But I'm already planning my second exit. Is that even correct? Look at the base that this thing has formed from really basically 2022 that it finally broke out of. Some people would say, Mish, you're crazy. Why would you even think about a second profit target? But that's why Geoff started with super micro, because a lot of people thought that when it was trading up at 125, and look what happened to them. So we really want money management to be the key of what you have to think about today. So there's a couple of things that irk me about this trade right now that could change. Number one is it's still below the 200 week. Notice the slope on the 200 week, it's negative. Number two is on the weekly chart leadership, it just slightly started taking out the performance of the SPY. In the momentum, just like on the weekly chart, it has not taken out the 200 week. Can it? Absolutely. Maybe if you're a long-term player who really believes in the future of Cathie Wood and you think that the worst is over, you would just have that no loss stop and not take any more profits, but not me. I would go back now and say, I've got my 2-to-1. Where am I looking for my next profit target? Somewhere between 3-to-1 and 4-to-1, which means I would be looking for about another $8 from here. And that's where 64 matches perfectly with that 200-week moving average. And if you follow that 200-week moving average back, go back a little bit, Geoff.
Sorry, I just want to illustrate 64 right there. Yeah.
Okay. So not only will that give me another $8 in the trade, well, actually from 58 to 64 is $6 in the trade. So about another 1.5 times my initial risk. But if you go back to the left of the chart in 2022, after that chart, after ARK broke down, it came back and retraced to that 200 week and hasn't seen it again. So there you go. So that's how I plan my discretionary profit taking. If I take another profit at 64, I can tell you, unless it starts to sell off, and again, the topic we won't discuss today, which is the trailing stop, where I might put that stop, I would certainly not look to take another profit, because now I've locked in at 58, at 64, I'm long at 50, and I can afford to sit to see maybe Cathie Wood miracle has happened, and this thing can take a trip back up to 125, which is where it was in 2021 on that last rally before it totally collapsed. So does that explain things?
Yeah. Yeah. So you're combining both the targets and key resistance levels, which I would agree. If you can do that, that's always better. And you didn't do the math, but that 72 level, that's another basic ATR or R for you. Like if you're risking $4, that's another R for you. So it all, in this case, all lines up pretty nicely. And actually, a lot of times it will. You'd be surprised.
Well, that's where stock selection becomes so important, because there's so many instruments to trade. Why not trade the things that have the most obvious reasons to get in, like a giant base that goes back 2 years, which is why I chose to write about that. Just like I've written about so many other instruments that have had this giant base, like gold and silver, for example, when that was basing out. Or you finding something that makes a new low with a great reversal, or finding something that has a phase change. I mean, you can really afford to be selective and learn to think for yourself in terms of if you want to get into it. And selecting a stock, entry is always the easy part. Understanding the trade management and where to take the profit is what makes a good trader a great trader. Because like I said, if I have 2 profit targets going into major resistance, and now for some reason ARK continues to explode, I still have a good sized position and I can sleep at night. I know I'm protected. And then at some point after some parabolic move, I would look for another profit target. This is exactly how I traded coin at the beginning of this year. You know, I took 2 profit targets and then just sat and wait for the parabolic move to be over. But that's getting a little ahead. Really, we wanted people to understand today the initial trade, the thrust, and how do you look for that first and second profit target.
So let me pull up one you might have heard of. Looks a little bit basic. Whoa, what is that? Everything we've talked about today has been a like a big base or massive consolidation. So here's XRT. All right, we've been talking about this one for weeks.
Granny.
So you want me to put daily or look at weekly?
Well, the weekly first, because we can go to daily after that, but look at the weekly chart. So why was I so focused on retail? I mean, I'm not even going to go into the fundamental reasons. When I went on Charles's show last time and I pointed out to him that we had a 10-month consolidation in 2024 where 80 was the high and 70 was the low. And I basically said to him, that is one of the most exciting chart patterns when you have a 10-month consolidation like that. And if it gets through 80, I don't care what bad news you might want to conjure in your brain, just jump in and follow it. And that's why we're showing you the weekly chart, because you can see it clearer. Not to mention 80, even if you go back to 2022, again, look, if you learn one thing from today, people, it's to make sure you look left.
Yeah.
Always look left, right? And so if you look left, not only was it so spectacular that 80 was the resistance this year, but it was the last high before the correction that we had in 2022 when the Fed got more aggressive. There you go. It broke it today.
So if you're in this breakout, if this breaks out significantly through 80, where first of all, your stop's going to be a function of the chart, right? Or ATRs. And then you've got resistance. You know, I'm looking at these lows here at 84, maybe 80, what's this? It's not 90, 88, and then some really clear resistance up here, 92. Right? Is there anything else in that chart that you would be kind of considering when you think about the relationship between what's on the chart and what's in your stop?
Well, yes, and it actually has more to do with the fact that unlike what we just saw in ARK that had a gap up and then another gap up, just like SPY did and Diamonds did, this did not have a gap up. It just went up today. And so that, to me, takes a little bit of the tailwind out of it as far as I'm concerned. So I would then be more keen on considering the potential headwind if this A fails, which of course would be the stop, and then B, if it rallies, because the market is rallying, but the market doesn't really necessarily continue to rally, this might be one of the first things to turn around. Where would I look to lock in?
Right.
So can we go to the daily chart then? That might be a little bit clearer.
Yeah.
Okay, so it did gap up a few days ago.
Yeah, that's the election gap.
Right, that's the election gap, but it didn't gap up today. So
No.
we did not buy a full position, by the way. So, you know, full disclosure, I did buy it for the fund today, but we bought only half of what would be a normal size position because of this gap. It, you know, I've been doing this for a long time, so I would have loved to have seen a gap. That would have been different. So now let's assume my first indication would be, where would I put a stop? The stop, obviously, to me now is under 78 or under that gap low from the election day gap. So if I'm long at around 80, I'm only risking a couple of dollars. I like that if I'm going to stay disciplined, of course, and not go, oh, okay, if gap's down under 80, 78, I'm going to stick with it. No, this is where really ironclad discipline has to be employed. And so under 78, I'm gone. So now assuming it doesn't happen, it holds 80, where am I going to take my first profit? Am I going to take it at 84? Now, remember, Geoff just mentioned to you 84 on the weekly chart. I might make a choice depending on the rest of the market condition, because remember, now we're not talking about ARK, we're talking about the retail ETF. I might say at 84, thank you very much, let me take a little bit off. Or I may do nothing and go to a no loss stop, because remember, I didn't buy a full position. So I'm not so quick to take a profit, to take a half a position and make it even less, especially if this thing really starts making some big move. So most likely at 84, I would certainly say I am not taking a loss on this. I'm going to 80. So that means, would I add? Possibly, but that's a whole other topic for another day.
Right,
Another
right.
one that's a topic for another day. So let's assume I don't add, or let's assume I had a full position, but I got to 84, but I decided, you know what, with this massive breakout, this is going to be like a gold trade. I'm going to have ups and downs, but eventually Granny's going to be trading much higher. Where would my first profit target really be? And that's where I would have to say, if I'm risking $2 and I make like $8, if we can get closer to around that 88, 90 level, I would be happy to take some off here. Okay. So we're under 90. Yeah. Like, see where that peak is that you're seeing. Yeah. I would.
The retracement right back to the 200.
Exactly where it was back then.
That's roughly 88, 89.
Classic example of look left to make a decision right, but also classic example of risk versus reward. Even if we have the no loss stop now at 4 times the initial risk, I would always say, take a profit. And that's how I would continue to trade it. I would take a profit once. Maybe if it doesn't necessarily move up from there and starts to roll over, I might lock in a little bit more, still keep that no loss stop, maybe trail the stop. This is, again, topics for another time. But then, of course, the next place I would be looking for is as we got more into that massive consolidation we had in July of 2022, where it kept going. This is an instrument that likes to consolidate. And look what happened there. It consolidated, it made a new high, and then it failed. So, you have to know what instrument you're looking at. But I would probably say if it got anywhere near that level, which you're looking at right there, is at about 92, 93.
Yeah.
I'd probably lock in some more and then see what happens from there.
All right. Well, we should all be so lucky to be worrying about how to sell stuff that's up 4 ATRs or 20% in a week. But as you pointed out, it's important to do. It makes the rest of your trade a lot easier.
Exactly. And just like, even though today was about profit taking, knowing where your initial risk is also equally important, because it sets all your profit targets, number one. It also turns, something into what could be a disaster into a very minor loss, which means that you might be more inclined to look at this again, like I did with ARK years later or whenever it sets up again.
Yeah, and you know what? We didn't talk about this directly, but we talked about the fact that we're looking at the charts and we're looking at the target relative to the risk that we're taking. But we're really doing it mentally in the order of risk versus reward and then the charts. And when it comes to our models, which don't look at the charts at all, these all work 100% on risk reward metrics. And that just goes to show that if you're listening to this and thinking, well, it's not really clear where on the chart I should be taking my stops or taking my targets or setting my targets, that's okay. As long as you get the risk to reward portion down, it'll work. I like to tell people when I'm teaching about our models that the secret in our models isn't necessarily the entry and the indicators and how we know the ranking system. The secret is really in how we manage the positions, and we manage the positions on all of our models in a very similar way, and they're almost all based on the ratio of the risk that we're taking versus when we're taking our profits. So,
And the models were made that way. The algorithmic formulas were programmed that way based on the years as discretionary traders, where we basically did exactly the same thing.
yeah. So,
So I could remember doing webinars with you where we were talking about the ATR. And, you know, when it gets to here, you go no loss. When it gets to here, you take your first profit. When it gets to here, you take your second profit. This is all how the models were built. As a discretionary trader, you can be that rule driven, but the whole point of being a discretionary trader is that you have a little bit of wiggle room depending on overall market condition.
yeah. But the point that I want people to definitely take home is, we can talk about the charts and we can talk about the targets based on risk reward, and it's risk reward that needs to drive it.
Absolutely.
All right. Any other last comments, ideas, stocks you want to cover, or I think we've
covered it all. I just want to say
wrap.
one last thing about what your last point is that, you know, this really gets back to a lot of people who are passive investors who believe in compounding. They would take this conversation and think, oh God, well then you don't make the big bucks. You know, I love when these people post, if you were in NVIDIA in, you know, 1900s, you'd be up like 5,000%. Yeah, I mean, that is definitely a legitimate way to trade if that's something that you're inclined to do. And obviously, we talk a lot about that age factors and all this other stuff. But if you're going to be more of an active investor, you have to realize that right now in this bull market, you don't want to lose your cool in thinking that every one of your positions is going to become the next NVIDIA. Trust me, it's not. So that's why it's going to be so important. And even if you were into NVIDIA, you had so many chances to buy that stock back cheaper than where you sold it if you traded it and managed it well. And that's really the point we wanted to make today is don't get greedy. Use this as a strategy and you will live to see another day as a trader.
Yeah, you can take profits and still hang on to some. It doesn't mean you got to get out of everything all the time. So, exactly. Markets look really good right now. Even if you think they're going to continue to go higher, you should have a plan.
Absolutely.
All right. I'd say we're going to call it a wrap.
Okay, well, thank you, Geoff. It was great to be with you.
As always, bye for now.
Bye for now.